Hello, my name is Benjamin Z. Miller, and I am the managing director of a United Kingdom company, Alamo Mortgage Holdings. We can pay you a long-term passive income when you purchase our corporate income bonds. We offer a program that is specifically designed for maybe professionals, C-level executives, dentists, that may be in a situation where they are a few years away from retirement and they want to reach a certain passive income goal. And by purchasing our high yield corporate income bonds, we can get them there. The process is quite simple. We first determine your passive income goal. You give us an idea of what you're trying to reach. Give us an idea of how many years in the future you want to obtain that goal. And then we can work out an annual investment program where each year you can invest. And by the end of that term, you will be there. I'm going to read a very brief disclaimer, just one paragraph. And that is, as accredited investors, you'll be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. Fantastic. So how does our program work? You purchase our high yield corporate income bonds and you can earn 8%. 8%, and that is something that is used where we are going in and we're acquiring mortgage debt in the United States. We buy it at a steep discount, and that lets us pay our bondholders 8%. So we've got a great team with 200 years of business experience. But let's talk in general about how the program works. So imagine that you would like to get to 5,000 pounds a month of income. If you're in a position where you could allocate 750,000 pounds, we can get you there right away. However, if you're a few years away from that, where you don't have 750,000 pounds built up, you could get on our investment program and every year put 25,000 pounds, 50,000 pounds, 100,000 pounds until you build up to your goal. That is one of the nice things about Alamo is we can work with you. We offer long-term bonds. So why would this be attractive to invest into U.S. mortgage debt instead of just investing into, for example, UK mortgage debt? Well, that is because there's a big difference earning an 8% rate of return in British pound sterling and an 8% rate of return in U.S. dollars. I present here the long-term history of the British pound sterling against the U.S. dollar towards the end of World War II when the Bretton Woods Agreement was first implemented. At that time, one British pound had a lot more buying power. It could buy 4 American dollars. And through the decades, the British pound has lost buying power relative to the dollar, to the point where if we go to the 1st of January 2023, instead of one British pound buying 4 American dollars, it buys just a little bit over 1 American dollar. So you doubtless have noticed this if you've traveled around, how your pounds seem to buy less. This is something that we can help with if you would like some currency diversification. We can get you out of British pounds and into US dollars. Or if you're someone that thinks the pound is going to come roaring back, we are happy to sell you the bond in pounds. We don't make any money on it. It's just a convenience that we offer for people. So, but sometimes I talk to people and they say, that's a good idea, buying mortgage debt. Maybe I should do that. Buying U.S. mortgage debt. Well, it absolutely is a good idea. And it's something that with the right training, you can definitely do it. I recommend Eddie Speed in the United States if you want to learn about the mortgage debt business. But essentially, mortgages are determined by 6 factors: the buyer, the collateral, the down payment. In general, a larger down payment is better than a smaller down payment. There's less risk of a default. The interest rate, a higher interest rate's better than a lower. The history, is it a new note? Is it a mortgage note that has been paying on time? Is it third-party serviced? Is it just that the seller's telling you that they always pay on time? Or is there an independent third party that is verifying that payment, like a mortgage servicing company? And the actual paperwork. These factors are very important. And if you don't know how this all works, it can be a bit dangerous to buy mortgage notes. But if you have the proper training, you can. The great news about working with Alamo Mortgage Holdings is we have a team that has 200 years of business experience, and we can help you with everything. We do everything for you where you can just get that mailbox money. It's so much better. So here's an example to kind of imagine how this would work. This is a property that's located in Texas. I want you to imagine the sales price was $120,000. say that the buyer offered $20,000 down. They wanted the seller to finance. The buyer wanted the seller to finance because the buyer could not get mortgaged through a bank. So the seller agreed to act as the bank. The seller agreed to accept payments over time. They agreed on a 10% interest rate. Monthly payment was $877.57 per month. Let's imagine that 60 months have passed since this transaction occurred. The unpaid balance on that note is now $96,574.32. Let's say that the mortgage buyer wants to get a 12% yield. The highest they could pay for that note would be $83,322. So this is how that works. These notes are typically sold at a discount. Now, sometimes people will say to me, well, why in the world would anyone buy a bond? I mean, there's inflation. Well, folks, there's been inflation ever since there's been currency. So I wouldn't let that stop you from buying a bond. But rather than giving my opinion on that, I'm going to talk about a Nobel Prize winning economist. I'm going to talk about Harry Markowitz and how he constructed his own portfolio. Even though Harry Markowitz, you may not recognize his name, but if you have an account at Goldman Sachs or Merrill Lynch or Bank of America or a lot of the big investment firms, a lot of what they use and what they recommend to their clients is actually from ultimately the foundation of Harry Markowitz's modern portfolio theory. But when it came, he won the 1990 Nobel Prize for developing modern portfolio theory for his contributions to it. But when it came to Harry Markowitz's own portfolio, he didn't even use any of that stuff. He kept it real simple. He would put half of his money in stocks and half of his money in bonds, and then once a year he would adjust. So if the stocks went up a great deal in value, he would sell stocks and he would then buy bonds, or vice versa. If the stocks went down a great deal in value, he would sell bonds and buy stocks. And I'm suggesting that you should think about your own portfolio, what percentage of it is in bonds. And if you need to get more bonds, you should get in touch with Alamo Mortgage Holdings. We can get you some of our high yield corporate income bonds that are backed by hard assets, by real estate. We focus on the state of Texas. We're not buying mortgage debt all over. That's a big advantage compared to some of these guys that try to do it all over. We focus just on Texas. We do good deals in Texas. We've got a team in Texas. Texas is a state that's winning, and that's good for our bondholders. We've got people moving in from California, from New York. They're tired of the job killing legislation, and they want to move to Texas, and they love our real estate. They love to buy it. When they buy our real estate, it pushes up the value of the real estate. It increases the demand for the real estate. And as a result of that, that is a win for our bondholders because the collateral that backs our bonds is real estate. What are the advantages of the Alamo Mortgage Holdings bonds? There's several. Passive income. If you are looking for an above average passive income, you should get in touch. We offer maximum diversification. You're not just buying one note, you're getting a portfolio of notes. It is fantastic. We don't charge our investors any fees. A lot of times people brag to me about their low-cost index fund. I'm proud of you that you have a low-cost index fund. I think it is great. However, I think no fees are better than low fees. At least to me, that makes sense. And you might want to think about that as well. If you like low fees, you're going to love no fees. And you can get that with Alamo Mortgage Holdings. We've got a great team. I'm not going to go through the entire team here in this presentation, but you can go to our website, www.alamomortgageholdings.co.uk, and check out the team. We've got a team that has a lot of experience that can help with whatever you need. We are definitely excited about working with you. We've got an experienced team. We've got everything that we need to be successful for our bondholders, and we've got the best team that is available to help you at any time. A few questions before we wrap up. Why should you buy the notes if you're looking for an above average return? How long term is the note? We offer 3 years, 5 years, all the way up to 50 years. Can you put the notes into your self-invested personal pension? Good question. I see no reason that you can't, but it's ultimately up to your sipp provider. What type of an investment? It's a corporate income bond. Is it a regulated product? No, and that's part of the reason we can pay so much higher returns. We haven't had to go through the expense of regulation. If we went through that expense, we would have to lower our returns. That doesn't mean we'll never go through regulation, but a lot of our bondholders right now, they prefer the higher returns. They know what we're doing. They understand that it's backed by hard assets. They want the higher returns. How's the money protected? We have multiple layers of protection. Just get in touch and we can discuss it. who can invest, accredited investor, sophisticated investor, business, institutional investor, come one, come all to Alamo Mortgage Holdings. I hope that helps, and I wish you good luck with your investing.